Bottom fishing in stock markets. Everyone loves it but always miss it. Hi everyone, I'm Alex and I love to share stock trading strategies. Today, I would like to share the MACD operating strategies that I always use when bottom fishing. MACD biggest characteristic is stables but it lacks sensitivities. If you use MACD alone for the bottom fishing, it is difficult to buy at a low and safe price. After watching this video carefully, bottom fishing will become much easier. We suggest that you like, subscribe for repeating studies. Today's videos will mainly cover two topics. Golden cross underwaters result in multiple rebounds, each successive wave is lower than the previous one in a weak market. And every rise in a rebound now we use secret institutional parameters 5, 34, 5 for the following parameter, which allow the buying point for the golden cross to be relatively early. Both of the current examples occur with the golden cross above the zero axis. If the golden cross is above the zero axis, is it still can be traded? Of course, it can. Let's take examples. Nvidia from the 2nd November 2022 to 14th February 2023. This is evidence from the charts that stock have fallen below the 60 moving average line. After less than 2 weeks, the stock price rebound back above the 60 days moving average line. The MACD use institutional parameters and expected the golden cross. Typically, a golden cross underwater leads the multiple rebound. However, after this golden cross, the stock continuously rise. Why this happens? Because we use the 60 days moving average, which was still upwards, and the direction didn't change. The price only temporarily fluctuated below the upward moving average, even though the golden cross was below the zero axis. It was not far away. This golden cross is close to zero axis and consensus to the stock price returning above the moving average line. This is the buy point for a deep corrections. Like a dragonfly touching the waters. Have you learned it? In the practical applications, when the stock price fall and touch the break below the 60 days moving average, but the directions of the moving average line remain upwards, and the stock price can be rebound back above the moving average line, accompanied by the appearance of the MACD golden cross near the zero axis. This is the classic dragonfly touching the water strategies. The stop loss point of the strategies is to use the 60 days moving average as the stop loss. In other words, if the stock price quickly closes below the 60 moving average after the buying, then immediately set the stop loss. Otherwise, hold the stock until it reaches the target profit levels. The dragonfly touching the water strategies, very practical one. In the summaries, we use the 60 days moving average combined with the institutional parameter of the MACD. If combined with the trading volume, the success rate will be higher. This is what we call a success rate may approach 100%. So how to use it? First, in the several callbacks in the chart, we can find the first callbacks, the second callbacks, and the third callbacks. The first callbacks means that the stock price did not touch the 60 days moving average. The second callbacks means that it touched the 60 days moving average. The third callback means that it has broken through the moving average, then returns above it. So seconds and the third callbacks in the charts are just a minor corrections at this point. At this point, we need a focus on the coordinations of the trading volume. Here we need to talk about the classic terms called continuously 4 ladders volume. What is continuously 4 ladder volume? It means that the stock price has fallen continuously at least 4 days and the trading volume below it has been continuously increased for at least 4 days, forming a ladder shape. Volume patterns note that there should be no interruption in the betweens. Therefore, after the first callback in the charts, a continuously falling ladder volume appear at the final bottom positions after the 4 days of continuously decline. The price then stopped falling and stabilized after the bullish candlesticks. So if we buy based on the golden cross at this point, the success rate will be relatively high. Let's take a closer look at the third positions. Is also 4 continuously broken through the 60 days moving average. At the same time, the trading volume below it increased continuously for 4 days, forming a continuously falling ladder volume patterns. After the continuously falling ladder volume patterns appears the stock price rise and the trading volume decrease aggressively, traders can be considered taking actions near these positions. So we can see the continuously falling ladder volume. We also see that the MACD quickly appeared the golden cross near the zero axis. At this point, some investors begin to take actions. Of course, it can be more conservative to wait until the stock price stable above the 60 days moving average before buying or opening a position, both of which can enjoy the subsequent significant increase. Here is all the sharing in this video. If you think that this video can help you to improve your trading strength, please like this video and then subscribe these channels. Next videos, we will guide you more the tips how to using the MACD in the profit taking point. Bye bye.